The judge, however, keeps him free. Rising anger tonight over the government's failure to bail out middle-class Americans struggling with massive credit card debt. The banks receive billions of taxpayer dollars and interest rates now at record lows. But as Inez Ferre reports, credit card companies are squeezing middle-class families with outrageous interest rates and fees.
Miguel Belchera says his bank will not reduce his interest rate of 28% on a credit card balance of $5,500. He says the bank raised the rate when he missed a payment and has rebuffed his repeated request to lower it.
I also pay my mortgage on time, pay my mortgage insurance. My income has also gone up substantially in the last 4 years, but still they won't budge.
Even though banks and financial institutions received $350 billion taxpayer dollars in emergency financial aid, for consumers like Belchera, the cost of credit is still high.
I just think there's an obvious exploitation that's taking place here, where they're not willing to work with me or probably other people who are in the same situation.
The research and advocacy group Demos estimates about 1/3 of credit card customers who carry a balance pay interest rates exceeding 20%. It says penalty fees are being applied more aggressively, with companies quicker to find customers at risk, increasing their interest rate to anywhere from 20 to 30%.
It makes it harder and harder for families to pay off their cards and to get out from under this debt, which then, of course, reflects poorly on their credit score, and the situation just gets worse.
Credit card companies have been lobbying Washington for years to keep regulation at bay. In the first 3 quarters of 2008, finance companies and credit agencies spent more than $24 million lobbying Congress.
It has a lot to do with the huge profits and the huge deep pockets of the credit card companies. It also has to do with an attitude that has been prevalent in Congress and in the present administration that's basically, hands-off business.
Federal Reserve rules to prohibit companies from increasing interest rates on previous balances won't go into effect until July 2010, leaving credit companies free to keep applying fees and higher rates until then. And as early as this week, Congresswoman Carolyn Maloney is introducing new legislation that would require credit card companies to, among other things, give advance notice on increasing rates. But neither this bill nor existing federal rules put any cap on the interest rate companies are allowed to charge consumers. Lou?
Well, this is a Democratic-led Congress. We have a Democratic, of course, president-elect. These are folks who said they were going to do something. They are playing patty cake with the credit card companies, and they are they're presiding over the absolute outright ripoff of the American consumer. Is there any chance we're going to see this change?
Well, they're hoping that this bill will go through the House and the Senate, but there's a lot of lobbying efforts that are in play here. There's a lot of
people are being bought off, is I think the way that I would say it. You'll call it lobbying. Let me tell you what it is. Folks, this is an absolute buy-off. It is disgusting what we are watching happen in Congress, and the Fed not making its new rules, which are moving in the right direction, effective until, as you reported, July of 2010. Thank you very much, Inez.